health insurance and workers' comp, until the Affordable Care Act was passed, we saw a lot of frivolous claims for work injuries because employees didn't have health insurance. And so they would get injured over the weekend, during their weekend warrior pursuits, and then they would try to relate it to their job so that they could get medical coverage. The theory is now that more and more people have health insurance coverage because of the Affordable Care Act, Obamacare, that maybe some of these frivolous claims will drop. But what it won't affect is true claims, because health insurance is not going to pay for injuries and medical treatment for injuries that it doesn't have to, and it does not have to cover medical payments for work-related injuries because that's under workers' comp. So if you've got an employee who is injured on the job and goes to their family doctor and says, I was injured doing X, Y, Z at work, the family doctor is going to put that in the note, the health insurance company is going to see it, and they're going to deny payment. So if you've got the situation of the tough guy who doesn't want to tell you he's injured, for example, and it gets to be too bad after a couple of weeks, and he goes to his family doctor and that scenario plays out, he's going to be pretty mad when he gets the full bill from his family doctor because his health insurance didn't cover it, and that's probably when you're going to learn about his work injury.
But what if he doesn't, I'm sorry, what if he doesn't tell the doctor, and then later on he comes and he wants a workers' comp claim, is it really going to be a battle amongst the insurance companies?
It's not really a battle amongst the insurance companies at that point. The health insurance company, once it's on notice that it has paid bills that it wasn't responsible to pay, can, if it chooses, assert a lien, and workers' comp carrier would just have to pay the health insurance carrier back. They don't always. Sometimes they never find out, but sometimes they do. And so that's how it works out. Did you have a follow-up question?
I think it was on just liability. Like if he comes at day 100 after the incident happened, is that my liability then? If it would be after 120, am I free and clear? Or
you'd have an argument that you're free and clear. Yeah. The insurance company could technically deny his claim because he didn't fit within the notice time frame. Yeah. Okay. Okay. So having said all that, do you need a workers' comp policy? Well, yeah. I mean, if you employ at least one person, then yes, you do. The Workers' Comp Act used to be elective. That was rescinded in 1975, so it's absolutely 100% mandatory now. And failure to provide workers' comp coverage is a crime. Depending on why you didn't have workers' comp coverage, it can either be a misdemeanor or a felony. I mean, in order for it to be a felony, you would have had to basically sit through this entire presentation and then just decide, she's kooky, I'm not getting workers' comp, and completely cancel your policy and not have it. That's real intent. I mean, you're supposed to have it and you don't. A felony is punishable by a $15,000 fine plus up to 7 years in prison. Misdemeanor is $2,500 fine plus 1 year imprisonment. So the state doesn't take this stuff lightly. And obviously failure to insure will cost you. Certainly it costs you to have coverage, but I'm telling you it's a lot less expensive to have coverage and to maybe cover some of these questionable independent contractors that are in a gray area than it is not to. Because, I'll just skip ahead. Again, if the independent contractor is not covered under your policy and they file a claim against you, your insurance company will probably provide you with the legal defense, but they're going to do so under a reservation of rights letter, and if you lose, it's going to be all yours. The other thing, just going back, if you don't have insurance, you don't get the insurance-funded defense, so you don't have an insurance company paying my bills, for example. There's no limitation on benefits. So the question of can the spouse claim loss of consortium, loss of services, if you have workers' comp coverage, no. If you don't have workers' comp coverage and it's a workers' comp injury, then that employee can sue you in court, and it's fair game for all those non-economic damages. And then there's the uninsured employers guarantee fund that I mentioned. Let's see, we talked about that. So again, best practices, when you sit down with your agent to talk about coverage, talk about every single person that comes onto your farm. Explain why you think so-and-so is an employee, is a borrowed employee, is a casual employee, is a vendor, is a contractor. And really have that in-depth discussion so you make sure that you're covering everybody that needs to be covered. If you don't tell your agent about them, your agent can't cover them for you. Don't make assumptions, have the conversation. If you have independent contractors, make sure they have coverage. Insist upon it. Have written agreements. The other thing you can do is you can insist on indemnification language. And this is where you'll need to get a lawyer involved. But you have an agreement with your independent contractor that says, you're an independent contractor, you're not an employee. You will have workers' comp coverage for yourself and all of your employees. And if for some reason you're found to not be an independent contractor, or if for some reason your employees come onto us, you're going to indemnify us. So we'll pay the benefits, we'll pay for the defense, but then we're basically going to bill you back and you're going to pay us. And it's a contractual agreement, it's a contractual arrangement, and it's legal. So that's something to consider. And then basically, an ounce of prevention is worth a pound of cure. So that's why coverage exists.
Yes.
I had a workman's comp audit last week, and I got a call, and the person was asking for, from the auditor, asking for workers' comp certificates from several people that do custom work for me. First time ever. Is that?
That's normal.
Okay.
Yep. Because they want to make sure that the people that you have on your premises have coverage for themselves, so that they're not coming back on you for workers' comp coverage.
We both responded and saying they have to go to their carrier to get the coverage certificates on the case.
Denise, that's an area that's a real problem, because a lot of times when a farmer has somebody coming on to do custom work, he's a sole proprietor. He might be a crop farmer and he doesn't have any employees, and so he's custom planting corn. He does not have a workers' comp policy. So how do you? It's a good question, Don, because we run into this all the time. So where does that come into play, and how's that resolved?
Well, I think then you go back and you ask for some kind of affidavit or documentation that they are a sole proprietor, so that you can demonstrate that they're not subject to workers' comp for themselves. But then again, you have to sit down with your auditor, you have to sit down with your adjuster, and you have to talk about the work that this person is performing for you, to make sure that there isn't something in that fact pattern that somehow makes them one of your employees. And then you can, of course, have this sort of contractual indemnification agreement if you really want to get aggressive with it.
Okay. Awesome.
Are the owners of an LLC employees of the LLC?
I think the answer to that question is yes, but I will tell you I'm not 100% certain of that. I think yes.
And a corporation also?
Yes. That's right. That's when we would have the opt-out.
LLC get an exclusion sign for the.
And of course.
Yeah. Yes.
In my situation, I have my dairy farm rented out, the
Okay.
barn. And those people that are working there, am I responsible to have workman's comp on them? If they fall down the sow or anywhere and get injured?
You're renting it to another company or to an individual?
An individual. Well, it's an LLC.
You're probably not responsible for workers' comp. they would need to have their own workers' comp coverage if they're an LLC. You would still have responsibilities generally to maintain and upkeep the premises, and if they were to be injured, they could still sue you in tort, but they'd have to prove negligence or some kind of faulty act by you that caused the injury.
If that LLC doesn't carry comp though, and then that one of their employees is injured on your premises doing work for that LLC, can they, I think we sent you over an example that happened in Indiana, where, to bring everybody up to speed, there was a farmer who hired a painting company to come on. The guy got electrocuted on a power line and fell from the ladder and was injured. The painting company didn't have comp, and the premises property owner did not verify the comp certificate.
Right.
And then they actually went back onto the premises liability portion of the GL
Right.
and collected on that. Is that a scenario that can happen in Pennsylvania as well?
Absolutely. Absolutely. Yeah. And so you have to be careful about your premises liability and your general liability as well, and to see what kind of exclusions are in there, because I think, and I read this maybe 2 days ago, the insurance company was making an argument that there was exclusions in there. So yeah, you need to make sure you know what your coverages are. It's that's why I said, when you sit down with your agent, you need to talk about the big picture of everything that happens on your premises. Whether it's your business, what you rent out, anybody that's on there, talk about that so that you can get the coverages that you need to protect yourself. If anybody else has any other questions, over the next couple of days, or if you think of anything, my information is on the presentation. I think they also included a bio sheet on me, which is kind of scary, in the back. You could call me or email me at any time, and I'd be happy to take your questions. So thank you for your attention. I hope the coffee kept you awake, and I appreciate being invited to speak to you.
Thank you, Denise. Hopefully you've been enlightened, hopefully not scared too much.
It wasn't my pleasure.
But workers' comp is we think it's an incredibly gray area in the insurance world, and as you can see in the presentation, there's a lot of times, it's not a definitive answer, and you sort of have to hold your breath until it gets to court, which is really scary. In the case that we referred to about the Indiana case, I believe the company paid on that. The insurance company paid, they tried to say, hey, it wasn't our deal, but the court came back and said sorry, and so the farmer's GL policy paid on that one. And that's where we end up, in the court at the mercy of the jury or the judge. So, thanks, Denise. You have her contact information. It's strictly an informational meeting. If you want to talk to her afterward, any of us, that's fine. There's still plenty of coffee. There's 2.5 dozen donuts. And we didn't have everybody out that was supposed to come, so that's to benefit you. You can, it's your mid-morning snack. And any questions, don't hesitate to call us or get in touch with Denise about
I'm sorry, I have a lot of questions, but in terms of filing a claim, it's a statutory rate, so your rate won't go up, or will it go up, and then also risk of being canceled?
That's a question for the insurance.
Right, that's right.
And the rest of you in the back here can help out on this. Your question is, if I file a claim, does it affect my rate? Or can I be canceled? The answer to that is yes and yes. Now, they can't necessarily just flat out cancel you. You have to be given fair warning. If your policy generates a large enough premium, there's a thing called an experience modification factor. And typically, like 1 is like level, and then it can go up to as high as 2, which means you're paying twice the premium, or it can come down below 1. And you have to have at least, $5,000 premium before you get a mod? Mm-hmm. Yeah, your premium has to be at least $5,000 before they calculate a modification factor. There's also a merit rating, which is 5%, and that's kind of a general thing, you just get it, and so forth. But let me just say about the mod. That's based on severity and also frequency, and it goes back and looks at 3 years of claims. And that's what they So it's based on, it's a big, long formula, but it's based on the class you're in and how much premium you're paying and how much claims have been paid out and so forth. If you have an experience modification factor and you say, oh, I'm at 1, that's good. I would encourage you, no, that's not good. Because you could have a mod factor of 0.75 or 0.68 or something like that. What you want to shoot for is the lowest possible mod that your class of business can get to. So 1 is not necessarily good. It means you're not being surcharged, but you're also not getting a possible discount. So, you know, you can ask your agent, well, what's the lowest my mod could go? And that's what I want to shoot for. Because when you're above the lowest possible, you're letting money on the table. And where safety groups come in and doctor panels help to affect all that. So if you had bad claim history, yes, your premium can go up because of that mod factor. The other question is, can my policy be canceled? Yes, a company can come in and say, hey, your claim history is just horrible, and we're going to get off of it. And basically, they don't cancel you; they non-renew you when it comes up. But they have to give you ample time to shop it. And if a company is getting off your policy, that's pretty much a good indication that nobody else is going to write you either.
And that's where the state workers.
Then you go to the state workers' comp fund, and their rates aren't necessarily friendly, and their service isn't necessarily always friendly.
Right.
And they're not friendly to us. You know, you guys are used to working for nothing. We're not. But if we do a state workers' comp fund, we work for nothing. So you say, all right, fine, you got it. Yes.
The panel providers, that list that's provided by the agents or by the...
By the insurance company.
Okay. Is it possible to make additions to that?
I believe that is absolutely, yes. You
Yeah.
can have input on that.
And how does the company go about requesting that?
Well, you as the employer can tell the insurance company what you want your panel list to be. If you have an idea of the doctors that you want on there, you get to create your panel list. Generally, for smaller employers, they don't get that involved, and so they just ask the insurance company who they have. So all you need to do is you need to sit down with the insurance company and say, this is who we want. They'll help you put the list together.
And say there's some type of specialty doctor not included on the list, okay, then for an employee to choose whoever they want
Yes.
and it will be compensated?
Yes.